Ladies and gentlemen, good day and welcome to the Muthoot Finance Limited Q1 FY22 results call hosted by ICICI Securities. As a reminder, all participant lines would be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kunal Shah from ICICI Securities. Thank you, and over to you, sir.
Thank you, Inba, and good evening everyone present on the call. Today we have with us Mr. George Alexander Muthoot, Managing Director, Mr. Alexander M. George, Deputy Managing Director, Mr. George M. Alexander, Executive Director, Mr. George M. George, Executive Director, Mr. George M. Jacob, Executive Director, Mr. Ethan Alexander, Executive Director, and Mr. Uman K. Mamen, Chief Financial Officer from Muthoot Finance Limited to discuss their Q1 FY22 earnings. Over to you, sir.
Thank you and good day to all. I am happy to present the earnings call for the quarter 1 of 2021-22. The consolidated gross loan assets has reached 58,135 crores from 46,501 a year ago, showing a growth of 25%. And the consolidated PAT has reached 9 crores, a year ago 858 crores, which shows a 14% growth in the profits. This quarter has not been very good because the the pandemic, the COVID effect of this year was actually there in April, May and June. Similar quarter last year, the impact was only there in March, April and May. So this year, all the 3 months of this quarter were affected. Now, glad to report that things are looking up. All branches, everywhere, things are open. Everything has opened up. Business has really started picking up. This quarter, the Q1, there was no growth in the gold loan business. Rather, there was a small fall in the overall AUM because we consciously regrew our non-gold loan portfolio. But we see good prospects in Q2 and certainly better prospects in Q3 also. So we would like to retain our guidance of minimum 15% growth in AUM this year also, and we are hopeful that we should be able to do it because now we are seeing signs of improvement in the economy, which means that credit growth also should start, and once credit growth starts, gold loans would be in demand. Our non-gold loan verticals, yes, because of this COVID, we were planning to start good business in last 6 months back after the COVID first wave, but then soon after the second wave also came, so we have actually delayed the business activity or business growth in the non-gold loan business. That is why we have seen a degrowth in the non-gold loan portfolio, both all in the microfinance, the home finance and the vehicle finance business. But here also we should be seeing business and growth picking up in this quarter. Rather, end of this quarter we should see business picking up, and by quarter 3 and quarter 4 we should see better growth in these non-gold loan portfolio also. Our non-fund based business, which is the broking business, has done extremely well this quarter. We have good growth in the insurance broking business, and good profits have come from there also. As far as the Sri Lankan subsidiary is concerned, it has actually been more coming out from the non-gold loan business, and it is now personally doing only gold loan business. As of date, their gold loan portfolio is more than 53% of the total book. So we are consciously regrowing the non-gold loan portfolio in Sri Lanka and doing mainly gold loan business, and they have added branches also there, which is actually accelerating the progress of the gold loan. And we hope that by end of next year, in the next 18 to 24 months, we should see Sri Lanka business also a mirror image of Muthoot Finance with more than 90% of gold loan portfolio. So gold loan business there also is very good. So we have been able to curtail all our expenses also. So this time also our expenses have been put under control, and those are some of the reasons why our profit has also been okay. Rather, we have been able to make 979 crore profit. Otherwise, yes, all the other businesses, as I said, we will be restarting the non-gold business maybe after 2-3 months, little more speed. And the gold loan business, yes, as I said earlier, has started doing well, and we should see good growth in gold loan business in the next all the coming months going forward. With that, I think I will stop here and maybe wait for any questions or clarifications from your side.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Harsh Shah from L&T Mutual Fund. Please go ahead.
Yeah, thank you. Good evening, sir. So, sir, my first question is regarding how is on-ground situation when you entered Q1 versus when you are exiting the Q1 and as on July? And how has been the customer feedback in terms of repayment? How has been your collection trends? How has been your overall business trends when compared with the start of Q1 versus the exit of Q1? That is my first question. And secondly, sir, can you just throw some light on the drop in yields that we had in this quarter? What was the main reason of that, and how will that look like once we enter Q2 and remainder of the financial year 22?
Yeah, thank you. See, as I said earlier, the COVID impact was very prevalent in all the months in the last quarter. That means April, May, June, the COVID impact was very severe, and many branches were not open. Branches were open partially only. So that was the reason we saw very tepid growth in the first quarter. Now, as I said earlier also, things are looking up. Business is picking up. All the branches everywhere is open, and people are coming for gold loans. The repayments and collections, see, there is no EMI collection in a gold loan. It is only bullet repayment. So people are coming to repay the loan. They are coming for fresh loans. They are coming to pay interest. So I think it's almost as business as usual going forward from here. Now, the drop in yield, the yield is always, there is a 1% fluctuation in the yield every quarter. Sometimes it is 22, sometimes it is 21, sometimes it is 20. It goes back to 21, etc. There is nothing. There is no specific reason for that drop in yield. It is because sometimes, occasionally, we give different schemes for customers also. So that must have been some of the impact of that only. I don't think there is anything else to that, because we have not consciously done anything to reduce the yield.
Right, sir. And just one last question, sir. How much of have we done any auctions in this quarter? If yes, so can you just tell us the quantum?
Yeah, we have done about 37 crores of auction.
37 crore, right?
Yeah. Yeah.
Okay. That's it from my side. All the best and thank you.
Thank you very much. We will take our next question from the line of Amit Ganatra from HDFC Asset Management. Please go ahead.
Yeah, I had a question on the balance sheet movement QOQ. So effectively on a flat, quarter-on-quarter AUM, your borrowings increased by 1,800 odd crores. And this was on a balance sheet which was already carrying excess liquidity till previous quarter. And even in your presentation, if you see QOQ cost of funds have gone up. So incremental borrowing cost also seems to be higher. So can you explain what has happened this quarter? Why this kind of balance sheet movement as well as the increase in cost of funds QOQ?
So, sequentially the absolute amount of finance cost has gone up. That is because the level of borrowings which was there in the Q4, because of the growth in Q4, that borrowings have gone up. Second, there was a turn in the borrowing. So we had about 1,900 crores of NCD repayment. But in June, but we had raised some about 1,500 crores of NCDs in April. So that was carrying as an additional liquidity in the books. But net at the end of June, you won't see that additional amount which was raised. So for almost like 2 months, we have incurred additional expenditure on those additional borrowings which we have done. And in terms of cost of borrowing, I think we should see that coming down. Probably a little bit of averaging impact also has impacted the calculation. But otherwise, I think in the next 1 or 2 quarters, we should see a significant decline happening in cost of borrowings.
And what should we expect on liquidity? Because liquidity also QOQ has actually gone up. Excess liquidity that you are carrying on the balance sheet.
See, I think at least for some time we have to maintain this level of liquidity. Like we have explained in previous quarters also. One, because of the uncertain times, it's always better to carry excess liquidity, and it gives a lot of flexibility for us also to negotiate better rates, etc. So we don't want to be stretched in terms of the liquidity question. Second, it helps us in planning for the growth, because all of a sudden when the growth starts happening, we don't have to run around for raising funds. So it helps planning our growth plans. I mean, meeting our growth targets. Third thing is that the liquidity coverage ratio also has been implemented. So we need to ensure that these are all maintained. What we need to look at is how we can increase the returns on the excess liquidity which we are carrying. We are taking certain steps in the next couple of quarters to increase the yield on these idle funds which we are maintaining. But I think at least for a few quarters we have to maintain this excess liquidity in the books for planning our meeting our business targets.
Thank you.
Thank you. We'll take a next question from the line of Prashant Sridhar from SBI Mutual Fund. Please go ahead.
Yeah, thanks for taking my question. Just 2 questions, sir. One, on the gold loan market, if you could just give us some idea of the on-ground situation, maybe not specific to you. Well, I guess Muthoot Finance doesn't do much options, but couple of news items saying that increased options or increased non-repayment, etc. Just some idea around that. And for Muthoot Finance on the non-gold loan businesses, if you could give us some idea on stage 2 and restructuring, and maybe collection efficiency on the MFI side.
See, on ground, the gold loan business is growing now. And if you want a comparison with, there was some talk about in the news also about too much of auctions coming, etc. But I think those came because some other company had given short-term loans. So when they give short-term loans, it becomes non-performing, or a technical non-performing becomes quickly. So in order not to show too much of NPS in their books, they would have done auctions. But since we give the loan for 12 months, we have time, and none of these loans are becoming a probable loss item, because the present gold price can support even in a bad time for these. So we don't foresee any loss, etc. on these accounts. So that is why we have been maintaining them. So probably if need comes, we will also be doing some auctions. That is a regular feature, monthly, quarterly auctions. Probably last quarter, because of the lockdown, etc., also auctions were very low. But going forward, we should see some auctions also. Last year also we did 400 crores of auctions. So similar thing we should see this year also. Then your next question is about the collection efficiencies, etc., in the other verticals. The other verticals, they are having
the stage 2 and restructuring and collection efficiency.
I know. So the other verticals have this EMI calls. So because of that, they have stage 2 assets, etc. And the collection efficiency for them with the stage 2 is for the home finance. It is April it was 84, May it was 83, June it was 87, and July it is 88. That is on a portfolio of 1,700 crores. And for the Muthoot Money, which has a portfolio of 330 crores, the collections in April was 71, May 65, June 76, and July 77. We see things improvement also happening. So going forward, it should only improve. But as I said, unlike the gold loan business, all the other businesses have the market problems. Every NBFC doing vehicle finance and affordable home finance has the same issues. I'm sure we will all come out of it going forward. But the redeeming fact we have is that our vehicle loan portfolio is only 333 crores and our home loan portfolio is only 1,700 crores.
Sure. Anything on the MFI, sir, and any idea on the restructuring?
MFI, the March was collection was 94, April 89, May 71, June is 66. That's how it is.
Mainly because of the lockdowns. MFI, you need to go there and collect.
We have a stage 3 asset of stage 3 of 112 and stage 2 283 crores out of 3,100 crores.
Sure. Thank you so much, sir. Very helpful.
Thank you. Our next question is from the line of Seshwan from Point 72. Please go ahead.
Hello. Thanks for the opportunity. So firstly, on the growth part, I guess to hit our minimum target 15%, there's about mid-single digit count Q-on-Q growth for the next 3 quarters. Do you mind give us some color on how should we think about the trajectory of that growth? Is it more like a gradually step up and more like a half-weighted, or how should we think about it? Thank you.
See, regarding the growth, we have been giving a guidance of 15% last 3-4 years, and going forward also we would like to do the same guidance. But our actual performance would have been much better. Last year it was instead of 15%, it was 24%. Prior to that year it was 22%, and prior to that it was 18%. So it also is a matter of the economic activity, etc. So as I said earlier, if things really look up well and credit demand picks up, the first person, the people come to gold loan for the first time. The first loan they'll take will be from a gold loan, which is the most easy. So we should see good growth pick up if the economic activity picks up. But we said 15% because that's an estimate we have been given over the last several years. I'm sure we should be able to do better than that.
Got it. That's clear. Thanks. So if I look at last year, after the first wave, September, we have a very tremendous good growth. I'm just wondering whether we are looking at similar kind of situation for the second wave here, or there's some fundamental difference?
Yeah, because the first wave happened in the month of March, April, and May. And this time it happened in April, May, and June. That means all the 3 months of this quarter were affected, whereas last year, 1 month of the previous year and the 2 months of the second quarter were affected. So quarter 1 of last year was little better than quarter 2 of this year. So quarter 2, things started looking up only by end of June. So I think July, August also, things should be looking better.
Right, but last year, September quarter, we have a very good quarter, and I don't know whether it's because of a pent-up demand or anything. Do you see that repeating this year?
Yeah. We can expect good demand. I don't know whether we should see the same demand of last September in this September also, but we should see definitely better demand for gold loan next 2-3 months, surely.
Got it. So last one is on the yield side. So I understand that there's sometimes we'll give some schemes. So are we thinking of giving a little bit more promotional schemes to kickstart the demand in the near term, or how should we think about that?
Yeah, I think we have some good budget for sales and marketing work. We do quite a lot of advertisements also, and we also bring up newer and newer schemes, probably offering new schemes, various schemes, etc., to keep some excitement within the employees and also with the customers that new schemes are coming. Also, all sorts of schemes so that we keep the excitement both within the employees as well as with the customers. So we have to be seen doing some of these things to generate newer and newer business, and it has almost always paid off. Our advertisement and marketing has always paid off. So actually, we can see a lot of advertisements in the local newspapers. We have started last 2 months, and now that the pandemic, the COVID protocols, etc., are relaxed, we have started giving more and more advertisements. So that's coming more in the print media as well as in the TV, mostly in the local languages, because the customers there are local language customers.
Got it. Understand. Thank you so much.
Thank you. Our next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, thank you for taking my question. Sir, I think I first need to kind of congratulate you for all the grit and resilience that you have kind of demonstrated this quarter and last year during such tough times. Sir, my question was more around, well, you have already touched upon it briefly in some of the last questions. What I'm trying to understand is whatever demand or disbursements that we saw during 1Q, was it also a function of the fact that southern markets, which are, I would say, your strongholds, were seeing relatively stringent lockdowns compared to the rest of the country, even let's say towards the end of June? And a related question here, sir, when you say demand is picking up, is it that demand is more strong in the northern part of India compared to the southern market?
See, when we say demand, when businesses open up, because at that time the people need funding to restart business, to do extra stocking, etc., stocking of their goods. So our main customers are small shopkeepers, traders, small businessmen. When their business actually opens up, it's the time they need money, and that's the time they come for the gold loan. So North India also, I think Delhi had a very tough lockdown last 2 months, but now things are opened up. Tamil Nadu, etc., is now fully opened up. Kerala is not fully opened up, but of course our Kerala market, our Kerala business share is very little. It's only about 3% of our portfolio. But still, some branches, some places are open, some places were open till afternoons, alternate days, etc., etc. Now I think everywhere it is opened all the days. So that's what I said. When business is picking up, small businesses should pick up. That's what we should. When small businesses pick up, they need money, and that's the time they come for a gold loan. So that's what I was saying. So it's not that our stronghold markets, we are strong in many places, and it's not that we are strong only in some place. We are strong everywhere. But then it is only up to the market which opens up, or the business activity which starts. When the business activity starts, we are in demand, or gold loan is in demand.
Okay. So the second question that I had is, while you're not in favor of auctioning a lot, in other words, if you look at the last 3 fiscal years, the quantum of auctioning for you has actually been kind of coming down on a YOY basis. But I mean, referring to the same article which talked about a lot of auctions for one of the other gold lenders, that same article also said that Q2 is exactly 9 to 12 months after we saw a peak in gold prices. And because a lot of lenders like yourself, or for that matter, banks who lent at 90% LTV back then, might see higher auctioning in Q2. What are your thoughts on that?
See, auctioning happens when customers are abandoning the gold. So we have, over the last several decades, we have been having definitely a much better relationship with our customers than many others. We are always in touch with them. We are collecting part interest from them. Although it is good for a year, we give schemes for prepayment of interest. So if they pay interest quarterly, we give some good discounts. If they pay monthly, we give better discounts. If they pay half yearly, we give discounts. So in spite of giving a loan for 1 year, we keep constantly collecting interest from them. We keep constantly engaging with them. That is why we are able to not have to go to the last resort of auctioning. So, of course, we also do auctions. We have done auctions. 2 years back, we did about 1,000 crores of auction. Last year, we did only about 400 crores of auction. So that is actually very minuscule when we compare with the lakh of crore. We lent 1,25,000 crores last year, and of that only 400 crores are auctions. That means it's a good sign that our contact with customers is better. So, but when somebody looks only at the LTV and give it at 80%, 90%, and they have no other ways of contacting customer and of collecting it, then they have to go for auction. So that's what I always say, that gold loan is a very operationally intensive business. People think it is very easy, but it is very operationally intensive, operationally challenging, and many people think just one cut, give it, wait for it, doesn't come, auction it. That is not how gold loan is done. That is why such customers don't go back to them for the second loan. We have more than 70-80% of our customers coming back to us later on. That is why we have the better relationship with the customers. That is something which we have developed and we have nurtured over the last several decades, which has not been able to copy or emulate by the new players. So they have only one thing: they give the loan, if it doesn't pay, auction it. That is not the way gold loan business is done.
And just to clarify, we never said that we are not in favor of auctioning, or we are in favor of auctioning. It is all need-based action which is required, just like Indisa mentioned.
Thank you. Mr. Tibrewal, may we request you to move to the next, return to the queue, as we have several participants waiting for their turn. Thank you. Before we take a next question, we would like to request participants to restrict their questions to 2 per party. Time permitting, you may come back in the queue for a follow-up question. Our next question is from the line of Subhranshu Mishra from Systematics. Please go ahead.
Hi, sir. Thank you for the opportunity. And I've got a few questions. One is, I wanted to understand the entire process of auctions as such, what kind of pricing we use,
who are the bidders, and what are the various safeguards for any kind of foul play that can happen in any kind of auction? Is it centralized or is it done in situ in branches? That's the first question, sir. Second is actually database. What is the interest accrued as of this quarter versus 1Q FY21? And what is the percentage of AUM which is more than 1 lakh rupees of ticket size?
Okay, so auctioning the properly is an art in itself. It's an art in itself, and we do our auctioning at the branches, at the regions, in the districts and in the states. So it is not centralized. It is done at the branch level. So we ensure that we get a reasonable, a correct price, and we have not had any, any frauds, etc. in the auction process, because we are very much in the ground. We know the ground realities. So we ensure that whenever we auction, we get the best price. So there are always chances of the auctioneers or jewelers coming forward and ganging up, etc. That happens. But since we have been doing it for the last several years, we do it, and we also have e-auctions. We do online auctioning also. So that is also started now. So I think we are the few companies, one of the few companies which are doing this e-auction. This also helps in this transparency and also getting better yield on the gold loan portfolio. Now your question about
interest accrual as of June 21 is 2,925 crores. Last year June it was 1,835 crores.
And a gold loan more than 1 lakh ticket size, percentage of AUM in this quarter?
I think it should be almost the same. Just give me a second. It will be 53%.
53. Thank you, sir. Best of luck.
Thank you. We'll take a next question from the line of Prakhar Agarwal from Edelweiss. Please go ahead.
Hi, sir. A few questions. To start with, when I look at your overall gold portfolio, so there is other loan component which is 500 odd crores. So we have seen a significant rundown in that if I were to look at from a 2 years perspective. But what explains this? What is the outlook on this segment going forward?
So, other loans has unsecured personal loan, that is about 330 crores. And we also have about business loans and miscellaneous certain loans of about 70 crores. And we also have given a loan to subsidiaries. About the remaining portion will be loan to subsidiaries. That will be about 200 crores. Loan to subsidiaries is about 120 crores. So, you are asking about the growth plan. Perhaps, unsecured personal loans will gradually go up. Similar, business loans also, we have a focus. That is currently about 60 crores. That will also grow, but of course not to the extent of the growth in gold loans.
Okay. So second question is in terms of your growth that we have been seeing. If I were to look at last 8-10 quarters and see how your AUM growth has been, large part of that has come from a value segment. And actually, when I look at from a volume perspective, growth has been relatively softer. What explains this, and how do we see this going forward?
No, we didn't understand your question. What is that?
So overall AUM growth that we have seen, if I were to look at year-on-year comparison, large part of that has come from AUM per gram increase rather than tonnage increase. If I were to just look at the numbers, it is at just lower single digits, while your AUM per gram growth is in excess of 20% plus. So how do we see this? What explains this, and how do we see this going forward? So essentially that means that newer customers are essentially lower, or how do we see this going forward?
New customers, see, you should understand something. I think we have been explaining it the last 2-3 quarters also. When a customer needs 50,000 rupees, earlier he had to bring 40 grams. Today he needs to bring only 30 grams. So it's evident there. So in 30 grams, he gets the same amount what he got 50,000 last year. So he will bring only 30 grams and the rate per gram will be higher. So today he will not expect the rate per gram at the over rate. He will do only what is required. So the rate per gram will be concurrent with the current price only. If the gold price is high, the rate per gram also will be high. If the gold price is low, the rate per gram will also be low. Suppose the gold price falls, the rate per gram will also fall. That's the explanation, sir.
It also a reflection.
I'm sorry, Ms. Agarwal. We'll maybe request you to return to the queue. There are
This
many
is just a follow-up on this. Anyway, done.
Thank you. We'll take our next question from the line of Manan Tijoriwala from ICICI Prudential Asset Management. Please go ahead.
Hi, sir. Good evening. Could you share how much total provisions are carried on the standalone and consolidated loan book as a percentage of total loans? And how much of this would be, say, probably excess in your opinion across the businesses right now?
So, the ECL provision as of June is 650 crores. In addition to that, we have some excess provision retained in the books, about 295 crores. So, totally we have about 945 crores of provision sitting in our books. And, consolidated it will be another maybe 100 crores more.
The gold loan portfolio has about 945 crores. 945 crores. The subsidiaries have about 150 crores, I think.
That is the total provision.
Excuse me?
That is the total provision in subsidiaries, right?
Total provision.
Yeah, another 150 crores.
Okay, sure. Thank you.
Thank you. Our next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Thank you, sir. Thank you for giving me the opportunity. Just one query. If we see the employee expenses, which is approximately 231 crores in this quarter, if we compare with the last 4 quarters, in fact, it is the lowest among this. Last year, same quarter, we know there was a complete lockdown. But after that, in Q3 and Q4, there were hikes and all those things happening because the business picked up. So we thought that run rate could continue in Q1. And if you can share how this employee expenses will run rate will go in next 3 quarters?
I think employee expense is almost similar to Q1 of last year. March, there are certain performance incentives, etc., as a part of that compensation, which gets added up. So, which is quite consistent across last several years. So, net there is no much of a change in the employee benefit expense.
So for full year, what should the run rate we can, as compared to FY21, what could be the...
Last, 1,006 crores is the last year full employee cost. We should expect something similar this year also. It all depends upon the various pay hikes, etc. happen at different points of time.
Okay. Thank you. Thank you very much, sir.
Thank you. Our next question is from the line of Alpesh from Motilal Oswal. Please go ahead.
Yeah, hi, and thanks for giving me the opportunity and congrats on a good set of numbers. Sir, first question is regarding the new customer acquisition. Despite they having a lockdown, we see that the new customer acquisition is quite strong in this quarter. So, can you just throw some light on that? That's the first part. Secondly, as far as growth is concerned, while the quarter end AUM is flat QOQ, but did we see a decline in April and May month, considering the interest income is down quite sharply on a quarter-on-quarter basis? And lastly, what is the reason for a QOQ decline in the other operating expenses and the director's remuneration? Thank you.
The growth in, what is the first question? Growth. New customers. New customers. We were able to add about 50,000 plus new customers because in the last April, May and June, we were in many parts where it was open. We were able to get fewer customers. That's actually a kudos to our marketing and sales team that they were able to add new customers. In this difficult time also, it's definitely a good achievement from the marketing side because in the month of June, etc., we had started good advertisements also, newspaper advertisement, etc. So that must have been some of the reasons why new customers would have come. Then the next question.
The operating expense.
Oh.
So the operating expense, for the current quarter, vis-à-vis the fourth quarter of last year, is low because fourth quarter of last year it was, the CSR expenditure booked was about 45 crores. It is not there in the current quarter. So that is one reason why the expenses. Second reason is the advertisement expenditure. Quarter on quarter it is low by about 17 crores.
And is there any bunching up of directors' remuneration in the fourth quarter?
It is usually paid at the end of fourth quarter.
Okay.
Mr. Amish, could you please return?
Yes. I'm sorry, the questions are not completely answered. There is last question. Regarding the AUM number, the April and May month, did you see a decline in the AUM, and June it's flat?
So, if you look at, for Muthoot Finance, it was almost like stable. If you look at the gold loan piece, we had grown by about 100 plus crores. So it was almost at the same level. Now, one thing which you can differentiate between last quarter is that last year, this quarter, it completely shut, but May onwards we are functioning. But this year what happened was that though it was open, it was not consistent. The branches were on and off, they are opening and closing. So throughout, on and off, we were able to open the branches, but it was not consistent. So if you look at the disbursements vis-à-vis last year, this year, the first quarter, the disbursements and collection numbers are lower than last year.
Okay, thanks.
Thank you. Our next question is from the line of Viral Gandhi from 91 Asset Management. Please go ahead.
Yeah, thank you for the question. Just about your NIM. I saw NIM fell this quarter, fell quarter on quarter. I know earlier on you mentioned that you occasionally offer schemes. Could you just give me a bit more detail on why NIM fell and also what your thoughts are on where NIM will go for the rest of the fiscal year?
So, just to give a perspective, gold loan is a very short-term product, and like Mr. mentioned, last year we disbursed about 1,25,000 crores, but the portfolio which is remaining outstanding in the books is only about 50,000 crores. So there is a churn which happens in the portfolio, and quite often there is a tweaking in terms of the schemes. And added to that, because of the COVID, a lot of these discounts, etc., have been offered at across the various schemes. So all these have an impact, but at the end of the day, I'm generating a return on asset of around 7.5%, which is very attractive, and I'm generating a return on equity of almost like 25%.
Okay, and the future direction?
See, I think we are generating about 7 to 8%. I think that should certainly continue unless our leverage is significantly going to improve from the present 2.7. So I think 7 to 8% is something which we should look at least for the near future.
Okay.
Talking about return on asset.
Okay. Last one was just on impairments. They were quite high this quarter. Why was that?
So, under Ind AS, it is, the impairment is based on the loan assets as well as the interest accrued. So, both together, the provisioning, etc., amount is quantified. And second, when there is a movement in terms of from stage 1 to stage 2 and stage 2 to stage 3, as well as crisscross, the changes, it also has an impact on the impact on the total amount of impairment. So, to answer your question, the current quarter impairment is primarily because of the increase in interest accrual and correspondingly the increase in the ECL provision.
Okay, thank you.
Thank Thank you. Our next question is from the line of Rikin Shah from Credit Suisse. Please go ahead.
Thank you for the opportunity. Just have one question. I wanted to better understand the process of online gold loan business. Understand that around 30% of gold loan customers transact online, but what's the entire process in terms of onboarding, them doing the transactions and the disbursements, everything? Thank you very much.
Online transactions means actually we encourage customers to transact online, that is to take their money online, to repay their money online, to pay the interest online. Actually, we have a hybrid system of actually assisted online boarding. So because our customers are not the high-end customers, we have to assist them initially to onboard them. So we encourage them to pay up their interest or take further loans on the gold through online. So actually, more than 70% of our customers transact online, but they don't do 100% of the transactions online. If the branch is open, they would rather come to the branch. If they have a difficulty in coming to the branch, lockdown or any other thing, they use the online business. But most of them are tuned to do it if need be. 90% of our customers prefer to come to the branch if it is open. If it is not open, it's a type that use this online methods. And this online also, we onboard them with assistance. So that is what. But then here also, the originating a loan, bringing the gold to the branch cannot be done online. The customer has to come to the branch and give the gold loan. When the customer wants to take back the loan, he has to take back the gold. He has to come to the branch to take back the gold. All the other financial transactions, you can do it online, and we encourage them to do it. Especially when all these lockdowns, etc. happen, many customers used to pay their interest, principal, take more top-up loans, etc. on this online business. So it has actually picked up well. But if given a chance, customers prefer to come to the branch to transact.
Okay, understood, sir. Thank you.
Thank you. We'll take a next question from the line of Shreya Shivani from CLSA. Please go ahead.
Yeah, hi. This is Piran, engineer from CLSA. Congrats on the quarter. Just a couple of data keeping questions. Firstly, if you have it offhand, what is the breakup of this 2,700 crores interest income? What is the breakup between regular interest and penal interest?
Penal interest is very little, sir.
See, penal interest normally applies for loans above 12 months. So that will be a very less.
Very less.
Okay, because in the past there have been quarters where
So I understand what you're saying. When we auction a gold loan or when somebody has taken or we keep the gold loan more than 12, 16, 18 months, at that time they pay penal interest. That is when sometimes we had a NPA of about 8% or 5% or 4%, etc. At that time, lot of old loans were there. When those loans get closed, they give lot of penal interest. Now our NPA is only about 1%. So that means loans above 12 months is very little. So on that, only very little penal interest can come now. Earlier, when they had accumulated a lot of old loans, then the interest plus penal interest was there. If that was what you were referring to earlier.
Yeah. So for the last few quarters, we've not had much penal interest.
Yeah. Yes, sir.
Okay, got it. My second question is for Oben, sir. You mentioned that we're keeping high liquidity to comply with LCR. So I was just curious to know what our LCR is. And secondly, what are our undrawn credit lines from banks, to cater to the growth if it comes? Why do we need to have on-balance sheet liquidity? Why not just keep undrawn credit lines?
Sir, this undrawn credit balance sometimes doesn't come if there is an issue. If there is a market hiccup or something is happening in the market, banks just will not give the undrawn credit also. They will see some excuse not to give it. So it is a risk just to keeping everything as undrawn credit. And one final morning when there is a real demand and there is some commotion in the market, banks will just delay it. So that is something which we should not. And for us, gold loan, a customer comes for a gold loan, we have to give the gold loan. If you don't give the gold loan, that is one of our main USP. Customers know that if they come to Muthoot, they can get money. So at the cost of some, some interest loss, it is better to keep some funding with us. That is the policy, that's the thought behind keeping a little extra. Of course, we understand that it is interest negative. There is a negative carry. But I think overall, we should see that it helps in the business growth. That is why we keep this. Not that we are aware that there is an interest loss, but then it helps in the overall business. And Oman always says that it helps in negotiating for better rates with bankers, with other lenders also.
Oh, okay. Sir, may I squeeze in one more question? Okay, I'll just go ahead. And this question has been asked before, but I'd really want some clarity now. We've seen banks compete quite heavily, like State Bank of India's gold loan book has gone from 5,000-6,000 crores to 20,000 crores. And the rate at which they're growing, maybe, who knows, in a few years, they might even overtake us. So, like, what exactly is our strategy here to counter competition? Because while this may be temporary or not, we don't know right now. It may turn out to be a more permanent sort of competition. But nevertheless, we need to have some strategy to, keep competitors at bay, and especially such large competitors. So have we really chalked out something?
Just one point to clarify. So what we hear is, State Bank of India has a very large portfolio, not the number which they are disclosing now. Because a lot of these loans are hidden under the agri portfolio, etc. So they have now started disclosing only the non-agri portfolio. So they have a very large portfolio. And what we hear is that banks have put a lot of restrictions now on this agri gold loans, etc. So gradually we will see this agri loan portfolio getting shifted to the non-agri portfolio. So we will not be surprised if there suddenly we see these numbers going up. So it will be only a shift from the agri portfolio to non-agri portfolio.
Anyway, to ward off, we can't ward off competition. We can only do our work better. So I can't wish others not to do the business. Let them do the business. But then as I said, we will try our best to see that we grow at least 15% year on year. So we have some things, some schemes, etc. in our mind, so that to see that we are able to grow the 15%. I think that is what we are here for.
Thank you. We'll take a next question from the line of Ankit Chheda from B&K Securities. Please go ahead.
Yeah, hi sir. So my question was on this yields for the first quarter. Usually, you said that it's a quarter phenomena. Sometimes it's 22, sometimes it's 21 and 23. But when I see a trend for last 2 years, that is FY20 and 21, last quarter June, and then also previous years June, there also the trend is definite in terms of having a lower NII or lower yields in first quarter of the year, and then it bounces back in Q2 pretty high. So is there any trend in terms of repayments being less in first quarter, or the bullet payments being relatively low in the first quarter and then it bounces back in Q2?
Yeah, almost you answered it. Sometimes in quarters also it makes a slight difference, 21, 20, 22, etc. I think we should not throw too much light on that. Finally, we should see that our NIM, etc., or the interest spread is protected. That's what we are trying to do. So sometimes there is a variation of 1%, 1.5% quarter on quarter, etc. And by year end, as you said, by year end we should be able to do better. But then even 21, 22 is a very good yield. Even 21 is good, 22 is too good. So being there itself is good, something very good and very good to achieve.
No, absolutely, sir. My question was not on maybe quantum of yield, but in FY20 per se, in first quarter we had a 3% degrowth in NII, and then next quarter it was 21% sequential growth.
Yeah.
So I was just asking about the phenomena.
So when the business also picks up, the interest yield also should pick up.
Sure, sir. That helps. Thanks.
Thank you. Our next question is from the line of Ankush Agarwal from DP Investments. Please go ahead.
Hello, sir. Thank you for taking my question. So again, on the yields, like you have earlier mentioned that our yields range from like 12% to 24%. Right. So what are the factors that determine the end rate that we charge the customer?
So we have different schemes, different seasons. Sometimes we give a lower yield. Some school opening season we can give a lower yield. Some other festival season we can charge a higher yield. So it is just geography specific, season specific, etc. we have. So we actually have to keep the customers also happy. Sometimes now we cannot advertise in the newspaper that we are giving loans at 22%, etc. What we have to advertise is we are giving at 11%, 10%. So we give at 11% also some loans. Others we give higher rates. So we have to be, actually say, these are all competitive teaser rates, etc. We have to offer here and there. Then only we can keep the customers happy and probably excite our staff also, because they also shouldn't come and say, sir, some other bank is giving at lower rate, our customers are going there. So we have to compete there also. So it's a daily routine, sir.
Right. So it's mostly like market dynamics and competitive scenario.
Exactly.
Right. So secondly, I wanted to understand the liquidity requirements of business. Right. Given that the short-term nature of our loans, there will always be a large inflows and outflows of cash. So does this result in a situation wherein a certain level of liquidity is sitting idle during the transaction phase of the loan? Is that understanding correct?
I think we answered it once or twice also. Keeping some liquidity at this time, it helps in the growth. If growth is really coming and we need money, sometimes this.
Right. No.
They are not. The second point is that keeping liquidity is also good for us. And third is. I wanted to say something before. Yeah. Okay.
Yeah. So what I was coming from is, I understand that you are doing it to manage the growth requirements and risk and everything. What I was saying that is it a built-in scenario in the business itself wherein, the loans are going in and out constantly, that it results in a situation within the lot of buffer of liquidity that gets accumulated?
Yeah, I was going to answer that only. See, if you are giving a loan for 3 months or 2 months, the loan is being paid back, and I have a mark to mark, I have a loan, I have a borrowing also for 3 months. Then it means that the loan, etc., gets extinguished, my deposit also gets extinguished. That's not the question here. We have to keep on giving loans because our loan churns in 4 months. So we have to be every day. So many people will come and repay. The same day we have to give loan also. So if you are going to stop the business, it is nice. Fine, everybody will pay, everybody will repay. But then if you are going to continue the business, then we need to keep on giving loans. The day you stop giving loans, then everything will come down. Of course, finally, there will not be any loss. The whole thing I will get back. But then the business will not be there. So that is why we need to keep on giving loans. So that is why we can't mark the loan as a 3-month loan and take a 3 months deposit or 3 months borrowing. That's the problem. That's the issue which I said.
Thank you. Ladies and gentlemen, due to time constraints, we will take one last question. That's from the line of Digant Tharia from GreenEdge Wealth. Please go ahead.
Yeah, hi sir. So you explained really well that gold loan is a very operationally intensive business, and everyone in the market knows that Muthoot Finance has mastered this business very well. So do you see any pressure on your employees, because a lot of your competitors are opening new branches or trying to introduce gold loan as a product in their branches? So is there a big competition in the market for your employees? And what, as a company, are we probably going some extra mile to maybe retain them, reward them? And are we running more schemes than usual because of the competition? Sir, if any color you can give on this particular thing, that would be useful. Thank you, sir.
Yeah. As you said, everybody worth the name wants to start a gold loan business today. And the easiest way is to take some managers or some other people from Muthoot or some other good company and start the business. But then, as you also said, it is a very operationally intensive, operationally challenging business. It looks very fine from outside, but operationally, everything is a challenge. Everything is a challenge, whether it is the keeping the gold, taking the gold, checking the gold, dealing with customers, auctioning it, everything is a challenge. And people just sometimes forget that just by getting 2 or 3 people from our staff, maybe paying them some 20-30% extra, they can do business. But quickly they will understand it is not possible. Now for employee retention, etc., many of our good employees are actually, they have a lot of trust and confidence in us, and they just don't jump the ship when somebody shows a carrot. Just a carrot, they may not jump. So we also keep a lot of employee engagement programs, rewards, recognitions, incentives, etc. We try to keep them happy. But all said and done, there are people who are trying to poach some of our staff. We are aware of it. But what can I do on that? But we see that we retain the good people with us. So it is not a good practice to poach people. There are some companies who are trying to do that, which is also unfair.
Right. So, sir, and any other things you are doing to, like, just, more marketing at the branch level or more teams or more than what we usually do because of this excess competition phase that we are right now seeing?
No, it is not because, see, I don't think we see a competition from these other NBFCs, etc., the banks, etc. Everybody is there. But we keep devising newer and newer schemes. Today, some schemes we give us 99 paisa interest. That is about 11.9%. So we have to advertise, we have to keep the staff also motivated, staff also challenging, because somebody shouldn't come and say State Bank of India is offering at this price, so customers are going from here to there. So we have to have a scheme for them also. But finally, we try to see that we are able to protect our blended yield. That is what we are trying to do. And I think to a great extent, we have been able to protect that yield. Going forward also, we will devise some good strategies in between to see that we retain our employees, we keep them happy, we retain our customers also. That's more important than the employee, is also the customers. If the customers are there, then things can happen. So we have some things customer-centric as well as employee-centric to do these things, and I'm sure we should be able to tide over this thing. Earlier also, about 10 years back also, we had the same issue. Everybody jumping into this soon after our IPO, when there was a lot of visibility on Muthoot and gold loan and profit and all these things. But then it also fizzled out after a year or so, probably. This may fizzle out, may not fizzle out. But then let us see. We are there to see competition also. I think that's our job here.
Because probably, I don't know whether you have seen that news. One large institution where a big fraud has happened. The branch manager or an employee has replaced some 400 or 500 packets, and that institution suddenly trying to grow big. Fraud happening in about 300 400 packets. It's a very large amount. So I don't want to name the entity, but those are the risk involved. Just because you have people and money, this doesn't work.
Right. So, sir, I'm sure you guys have seen cycles and you have a great process around it. So competition or no competition, Muthoot will keep doing well. So best wishes to all the team. You guys have done a really great job in the last 12 months.
Thank you. I now hand the floor back to Mr. Kunal Shah from ICICI Securities for closing comments. Over to you, sir.
Yeah, thanks the entire top management team of Muthoot Finance for such elaborative answers to all the questions, and thanks all the participants for participating on the call. Have a nice weekend. Thank you.
Thank you, Kunal. Thank you, participants. Happy Onam. We're having Onam this month here.
Oh, happy Onam, sir. Yeah. Okay. Thank you.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.